Hello and thank you for tuning into interest.co.nz. I'm Janae Tibshirani and today I'm joined by IAG's Chief Risk Officer and Disaster Recovery Lead, Karl Armstrong. Great to have you here, Karl.
Thank you, Janae. Thank you.
Look, it's been a busy time, obviously, for IAG. I'd just like to talk about the Kaikoura and North Canterbury earthquakes and how IAG is really dealing with this and holding up. The risk modelling firm Air Worldwide has recently said the insured losses of the quakes could hit $3.5 billion. I know it's still early days, but what sort of cost projections are you making at the moment?
Look, we don't actually have a cost projection at this stage. It's far too early. However, we do listen to the modelling experts, and at this stage I think when we talk about all losses, including infrastructure, acknowledge that Kaikoura is closed off to access major infrastructure issues, that's a possible figure. But at this stage, far too early to tell. I mean, our priority at this stage was making sure not only our staff were safe in all areas that were affected, but also that our customers are now safe, but more importantly, know what to do.
Okay. Can you give us any indication about around the number of claims you've received?
So far, we've had about 1,500 claims lodged directly with us, but we know that EQC have got about 7,500 of our customers that have lodged claims with them. So if you work that through, 9,000 of NZI, IAG, AMI, state customers currently lodging claims. Early days, but that's the number to date.
Okay. What do you think about that $3.5 billion figure that Air Worldwide has put out there?
I think it's just a figure that a modelling agency rightfully does at the time. Most modelling agencies do this. Everyone's under pressure to give figures as quickly as they possibly can, both to government, to their own organisations, to the general public. And at this stage, I think even that figure is simply based on statistical information, but I guess over a time will be tested.
Okay. Karl, something which we're all thinking is the insurance industry is only just recovering from Canterbury and that, it's not even in a really, really solid state, it seems, post-Canterbury. What happens if a big quake hits Wellington? How secure is the industry to deal with it?
Yeah. Look, I think the industry is secure. And let's think about Canterbury. We were right at the end of closing Canterbury. Most organisations are about 97, 96% through completion of Canterbury. So just when you think you're closing, unfortunately you're opening for something else. An organisation like IAG has got incredible backing from a parent in Australia. It is a market lead in terms of the size of the organisation. It has a high S&P rating. It has a superb reinsurance program, and that reinsurance program somewhat dictated by the Reserve Bank's requirement to have a 1 in 1,000 model. Therefore, you see programs that are substantially larger than companies were carrying during the Canterbury earthquake.
Sure. Just this week, Towers Chairman Michael Stiassny has come out and said that the insurance model in New Zealand is broken. He used quite strong language around this and basically was referring to the fact that private insurers are still today, 6 years on from the Canterbury earthquakes, getting new claims from EQC. And this has also been an issue for IAG. It's noted it in its financial results. And in the past year, it's bought another $900 million of additional reinsurance to pay for these costs. So, the claims are still trickling in, the costs are still building up. Will it be a similar situation this time with Kaikoura and Wellington?
Look, you're right that we are still seeing claims come from EQC 5-6 years down the track. And some of that is for a multiple of reasons. Scopes were wrong. Clients, as they've been paid to go and do their own repair work, have discovered further losses that effectively mean that it now has to come back to the insurance industry. So yes, that's happening. And we're frustrated that we haven't had clear sight of this. However, there is a working party currently with EQC and the rest of the industry to highlight some of the gaps in that data. And we're making good progress there. What's going to be different this time? We know Canterbury created a lot of lessons, and the first lesson was claim fatigue for the client. Most of our clients were subjected to multiple agencies, EQC, ourselves, external loss adjusters, external claims advocates, all those people creating confusion. Confusion because they expected one party to talk to them. We're now working and trying to get a collaborative agreement with EQC so that we can actually approach this as one party. A seamless approach from the customer's perspective. And that way we equally know what the data is. We've already changed data links with EQC, so there is real-time data rather than waiting for submissions at a later stage. So I think it is different.
Okay, so does this mean that EQC will still be the first party to deal with the claim, and then it'll go to the private insurer if EQC deems it over cap?
Yeah, look, we're working through that now with EQC because there is a probability and possibility that the customer will ring us direct. And if he rings us direct, then we'll be the first port of call for lodgement, and we'll work on behalf and work with EQC to make sure that we're not visiting the customer twice. We already have a customer that we're going to have to look after. So yes, we'll probably look after some of the EQC work as well, but that's still going through a process with them at the moment.
Okay, so that is quite different because with Canterbury, you had to go to EQC first.
Correct.
And now you're saying people have a choice if they want to go to their private insurer or EQC first.
We're there to help our customers, so if the customer comes to us, we're not directing them to EQC necessarily. We're dealing with the claim ourselves. We're going out, we're trying to get the immediate repairs done, the temporary repairs, emergency repairs, and we're also looking at how we progress on the contents and the actual property damage.
Right, so you'll do those initial assessments? Yep. Okay, so that's quite different because people were in some instances unhappy with the assessments that EQC were doing. Yeah, so we're still working through the finer details on how we'll do that with EQC in support. And when I mean in support, I mean being confident that we have the ability to deliver that. We're confident we have the ability. And this is something that through the Insurance Council, the insurance industry is working toward. And it's not that far away. Okay, so this is a memorandum of understanding?
Correct.
Right. And this isn't legislated. See, this is quite an interesting thing, really, is that we've had this EQC Act, which was supposed to be reviewed, and that review was meant to have wrapped up a few years ago. But that's been delayed, and now that's been pushed into next year. And these are some of the issues that's dealt with in that Act. So the industry is obviously trying to come up with a solution separate of the law.
Oh, I wouldn't say separate of the law. I'd say that what's happened is there's a reality here that we have to deal with a customer that's got a challenged situation, and working with EQC and ourselves, how do we come to one solution? We don't know if this is quite the right solution. We don't know if this is where the review will end up, but what we are saying is we have to have a seamless approach so that the customer is protected and put back to the position they enjoyed prior to this loss.
Sure, and hopefully that'll give you a bit more certainty as well, so that the costs won't keep escalating because you'll have done the initial assessment.
Hopefully, you're right.
Yeah.
It should give us that comfort. But look, things can change.
Okay.
But where we sit at the moment, we think that's a great solution.
Okay, right. Karl, also interested to talk about how these quakes are affecting people with their insurance cover. Generally, there seems to be an insurance freeze in quake-affected parts of the country. What's IAG's position on this? What sorts of restrictions has it put on insurance?
Look, it's traditional and normal after an event like this, and I'll probably describe it more that if there's a fire in the valley down below, and you've got a house on the top, when you see the fire coming towards you, you then decide to take insurance, well, that becomes inevitable damage. So we say no to it. But what we are doing is we set an area of freeze, to use your phrase, an area of freeze that we look at every 24 to 48 hours. And already IAG have lifted Christchurch as one of those embargoed areas, and we've also lifted West Coast Buller. And we will slowly review each of those as the aftershocks and risk dissipates. So it's just really saying that we have a need to protect our policyholders. However, one of the challenges is that people are saying they can't do property assignments, etc. Well, what we have said is that we will, where we, IAG companies, so AMI, NZI State and Lumley, have the insurance, we will continue that insurance even for a new owner.
Okay.
So effectively there is 50% of the market they still have access to, and most of the insurers are adopting that approach.
Right. Could an issue that people stumble upon be that, say I go to buy a property and I can't get new insurance for it, but I take over the insurance cover the vendor had for that property? What if the vendor's sum insurance was a bit substandard and they were underinsured? Treasury's raised its concerns around the level of underinsurance in New Zealand. Could this sort of be an issue in these circumstances?
Look, I think there is underinsurance regardless of this issue, because following the Christchurch earthquake, we moved to a specified sum insured policy. That's effectively where the client, through the use of calculators, through the use of external forces, set their own sum insured on this. And it becomes obvious that this hasn't been reviewed as it should, and we are seeing some underinsurance. I don't think the sale of a property is the cause of this. I think it's the original setting that is becoming a challenge.
Okay. How long can we expect these freezes to be in place for?
Look, traditionally about anything up to 30 days, but they can be longer depending on the aftershock sequence. But what you tend to see is the area, or the cordon as we want to call it, is actually reduced over a period of time.
Okay. And that freezes also on people who'd like to increase their cover?
Yes, it is, but what we are seeing is the knock-on effect outside the zone of freeze again, and that is that people are immediately reviewing their covers and immediately waking up to the fact that they don't have enough, and we're seeing tremendous amount of activity in reviews going on at the moment, but these are outside the zones.
Okay.
But yes, as the zones open up, we'll see the same activity.
Okay. Could you please just confirm the zones that are frozen at the moment?
Yes. The zones in the main are from the Waimak River north to sort of lower part of the South Island, lower part of the North Island, encompassing Wellington, etc. A little bit into Nelson, Marlborough, but we see Nelson not far away from opening up, and possibly parts of Marlborough. It's interesting, the damage activity doesn't seem to be so prevalent on residential properties in Blenheim, but we are seeing it in the rural community.
Okay.
So they will condense over a period of time.
Sure. All right. Karl, the effect this will have on the rest of us throughout New Zealand, on the insurance premiums we pay, what are the reinsurers saying to you at the moment?
Well, look, the reinsurance are not indicating they're going to remove themselves from New Zealand. They're indicating they're still very committed to New Zealand. They have recovered already from the Christchurch event. There is a lot of capital in the world. Some of that capital might think again how they operate and whether they operate within this country. So far at this stage we would envisage no change, but over a period of time what tends to happen is the pricing is reflected in the cost of the reinsurance program, and the cost of that reinsurance program gets passed back to the client eventually. So we might not see anything for the immediate future, but we will see something very shortly where prices will harden, particularly in the Wellington area, and also a return to more disciplined underwriting in terms of making sure we have risk management, making sure we have quality risks that are being attended to.
When do you think prices will harden? Can you give us some
They're hardening
time
now.
frames? Yeah.
So almost immediately. They are hardening, but they were hardening prior to the earthquake. And they were hardening because of different reasons, but now you're going to see an exacerbation of that.
Sure. Are people in Wellington going to struggle to get insurance?
Not at the moment. There's still plenty of capacity, or appears to be plenty of capacity. I can't predict what is going to happen in the future. We have no intention of withdrawing from Wellington. I think what we must consider at some stage in the future is a user-based pay system. So in other words, Wellington, you're a risk zone. You will end up paying for that risk zone. At the moment, there's still an element of cross-subsidisation going on in the industry, and we see that across the EQC as well. It's a community rate from North Cape to Bluff.
Right, so different areas that are higher risk will have to pay for that.
Eventually.
And
yes.
even within Wellington, so the parts that are on that sort of lower silty, soft ground, they'll be paying more. They probably already are, though.
They already are.
Yeah.
And on the commercial risks are already risk-based priced.
Sure.
So they're already paying based on their location, their construction, and the type of soil they're on.
Okay, Karl, thank you. I think that answers my questions.
Good.
Really appreciate your time, and
Thank
it'd be great to sort of keep in touch and keep hearing how you're going. Unfortunately, it seems like the ground won't stop shaking for a while, so this discussion will no doubt be ongoing.
Thank you.
Thank you. I'm Janae Tibbs-Shirani from interest.co.nz.